Shaun Haney here with RealAgriculture.com and RealAg Radio. I'm joined right now by Marlin Bohling. He is one of the anchors at Marketing Report, also host of Commodity Wrap on Rural Radio 147. You can hear in the mornings and in the afternoon right after RealAg Radio. Hey, Marlin, how's it going?
It's going fine. Hope it is where you are.
Yeah, it is. We're trying to stay safe. Everything's good. The markets are worse. It has been a tough ride here as of late. Marlin, let's start with the corn market. We're above $3, but man, the more analysts I talk to, I just hear more and more people kind of referring to this $3 mark. And could we actually go lower? What are you seeing, and what are analysts telling you on your shows?
Well, yesterday could turn out to be a pivotal day. We pointed it out during the Market Day Report show. We were watching that May corn contract, and it got down, and it was going down and down and down, and it got down to 301, and I remember it was down to 302, and I was pointing out to the audience, I said, we're getting dangerously close to that psychologically important $3 benchmark, and will it hold or not? What happens if it takes that out today? And we posed that question to several analysts, and several of them all agreed that we had a multi-year support level at 301. And it goes back at least a couple of years anyway. But anyway, they said, watch the 301 mark. If that gives way, then that would open up the door to maybe the mid-290s or something like that. It was very intriguing how it went down to 301. It sat there for just a little bit, and it didn't budge. It held, and then it went higher, but it didn't close higher. So technically, it was not what they call a hook reversal on the charts, but it was an important, possibly a low. Now look at it today. When I came off the air a little bit ago, it was up 8 cents. Mm-hmm. And we're way off of that 301 mark. Yesterday, the soybeans at the same time also had a reversal on the chart. And now they did have a hook reversal on there. They closed higher than the day before, but they didn't take out the previous day's highs, which would have been a key reversal. So it didn't count for that. But technically, that looked rather important on the charts for corn and soybeans, with all the negative pressure going on and all the pressure on the ethanol, the lack of demand for ethanol, the low crude oil prices and everything. Some analysts were kind of impressed with the way corn was able to hang on the way it did.
Yeah, and I think everybody, after watching what happened with WTI crude here in the last few days, and oil had a better day today, but negative prices. It's really. It has been, there's been a lot of bearish tone to all of this. You referred to ethanol, but of course there's also USDA's initial planting intention report of 97 million acres of corn. We've got some real supply out there. And whether or not you believe the 97, I think most people will take the under on that number. But we've definitely got some supply concerns out there and lack of demand.
Yeah, I don't think there's hardly anyone that I've talked with that thinks we'll have 97 million acres of corn. That's quite a stretch given how low the market is right now. And we are at that point where it's going to be a battle between corn and soybeans to we get the annual bidding for acres, as they say. They're going to have to try and convince farmers to go one way or the other if they can make more money. I'll throw another tangent in there to you. The cotton market has been getting pounded now. The southern half of the U.S., that's a big cotton production area. And the price of cotton has given way so much. When you have low crude oil prices like that, not only do we have low global demand, but we also have, when you have low crude oil prices like that, that makes man-made fibers that much cheaper. And they compete against cotton. That makes cotton a lot more difficult to make a profit on. And I've been hearing some people saying that farmers may be turning now to grain sorghum, or milo as we call it in the plains. They can make more money doing that instead of growing cotton like they normally would. And grain sorghum is kind of a companion product to corn. Feedlots can use them kind of interchangeably a little bit. So that throws a whole new twist in there as well. Maybe the corn acres will go down, and maybe maybe encourage a little more milo acreage this year or grain sorghum acreage. I've heard in
Yeah.
some locations they are actually paying more for that than they are corn this year.
Interesting, interesting. And of
Yeah,
course, in the Midwest, the switch out of corn means a switch into beans, and that's a bit of a gamble and a play on the fact that you're hoping that once we get to fall, China's going to live up to those phase one obligations.
right. Absolutely, absolutely, and that's a big question mark out there. And don't forget another wild card out there. Of course, I'm sure you've been hearing too about that cold snap that impacted the high plains last week, last couple of weeks actually, 2 or 3 waves of it. Shaun, last week I had an analyst telling me they were hearing from farmers in western Kansas, that's the wheat state, that they were saying they were finding ice inside the stems of the elongated wheat crop. Well, that can't be good because that's
No.
where that head is developing. Anytime you have ice in there, usually that head will come out sterile. And I haven't heard too much talk about that yet. So we have to wonder what that will do to the market. If it turns out that the wheat is no good, does that mean there will be some destroyed and go to something else? I mean, that's another unknown.
Yeah, man. And we saw that last year in Ontario. A lot of the winter wheat crop did not survive the winter. It wasn't
Yep.
necessarily cold snaps in the spring. It was more some icing off throughout the winter season, and some of that did get planted, of course, to corn or beans. The livestock markets, they have had uber challenges. We're having a hard time keeping these packing plants open, which has created a continued divide between farm gate prices and what people are seeing in the stores from a box beef perspective. It really has the livestock industry really looking at what does the future look like here.
And I'm sure it's identical in Canada as to what U.S. producers are going through. I don't know how much each one respectively is maybe losing per head at the feedlot level, but it's a lot.
Yeah.
And yet you keep hearing about, how much the middleman is making or the processors are making. The retail prices haven't really come down. I haven't noticed that. Have you?
No.
The producers have seen their futures prices go down. The cash cattle trade, that market went down, what, $5, $6 just yesterday again? And I've been hearing some reported cases where there's no room to put more feeder cattle, for example. We have a cattle on feed report coming out Friday. They expect the placement number to be maybe 80% of what we had a year ago. There would be that much fewer placements than a year ago just because there's no room for them anymore. And that's going to back them up, and that may leave some out there to graze out some wheat. That goes back to the question we were talking about earlier.
Yeah.
That might determine some of the wheat acreage this year. Same thing on the hogs. I mean, there's a lot of commentary now about are they going to euthanize some hogs out there just because there's nowhere to go with them with the closure of all these plants. And that's affecting both sides of the border right now, right?
Absolutely, and I think that's there's plan A, B, C, and I've been saying that D is depopulation, and that's not something that we want in the industry whatsoever. That is
No.
It's kind of a very much a last resort.
I remember when I first got into farm broadcasting back in the 1990s. We went through that back then. When was that? Maybe around 98
98, yeah.
or so.
Yep.
When they had, I think hog prices were like in the single digits, and yeah, there was a lot of that going on. That was a very dark time. Yeah, don't want to go through that again. Hopefully they can get something figured out and get these plants to push the animals through, get the product through to the retail channels where there is high demand. Wholesale beef and pork markets are just on fire, but yet the producers can't get that. And you can understand why there's so much stress and pitting one segment against the other right now.
Yeah, we've had our own ag minister here in Canada, Marie Club-Bebeau, and I heard Sonny Perdue from the USDA Ag Secretary say last week the same message that don't worry, this is not a supply issue, this is not a supply issue, it's a demand issue. But if we can't get hogs and beef through a slaughter plant, there is going to be some supply concerns.
Well, I'm doing my part. I mean, I'm grilling as much as I possibly can. I've gone through already 2 or 3 tanks of propane, I think, for the grill. So we're trying to keep all segments happy, whether it's the cattlemen, the hog producers, the poultry guys, trying to mix it up a little bit.
I hear you.
There's only so much I can do, Shaun, and probably you too. But, I encourage everybody to go out there and support your local livestock producer out there.
Yeah, I'm sure that there's a lot of listeners here that are trying to do their part as well, Marlin. Hey, Marlin, really.
And one thing.
Go ahead.
I wanted to point out one thing for you.
Yeah.
This could be a silver lining among all of this. Think about what this is doing for the hometown locker plant or butcher shop. Remember how they almost totally disappeared? But people have been asking me all the time, hey, where can I find somebody local that I can get some meat from? Boy, they could be just having all kinds of business right now. That's kind of a bright side to the story.
Absolutely. We could see a real jump in the local butcher shop. It would be, I think a lot of people would be very, very happy about that for sure. Hey, Marlin, really appreciate it. We'll talk to you again soon.
You bet.